Hi, good week to all. This is Kelvin here again. Welcome to this week, latest edition of our weekly technical outlook on the major stock indices for the week of 8th of August to 12th of August 2022. So, as usual, I'll be covering the key levels and the latest trend buyers for this week on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 indices. Okay, so before we start, let's take a look at the disclaimer slides first. All right. So now let's take a quick tour around the globe on this momentum analysis for last week versus its prior weeks to actually decipher the momentum trend of the US major stock indices, the Europe, as taking DAX as a proxy, as well as in the Asia Pacific region, using Hang Seng Tech, and the Nikkei 225 as the major bellwether stock indices for Asia. So let's start with the US stock indices first, pardon me, which is the 1, 2, 3, 4, the four main, the SPX 500, the Nasdaq 100, the Dow Jones Industrial Average, and the small cap Russell 2000. So what we could see over here is a pretty much mixed picture for last week performance. Nevertheless, it's actually more likely due to last Friday non-farm payroll data that caused a bit of knee-jerk reaction on that for a single day performance. So, but all in all, what we could see over here is that they still ended positive, mostly on the week. All right. So with the exceptional case is the Dow Jones Industrial Average, being almost unchanged at negative 0.13%. So this is actually being dragged down by a couple of we call it energy related stocks and financials. And but what's interesting over here is the higher beta or the growth sensitive indices like the Nasdaq 100, which is up by 2%, which is pretty much robust. As you could see, continuing its last 3 weeks of upside momentum, and you have the Russell 2000 also coming in at 1.94%. So all in all, pretty much of a healthy picture. So now the story gets interesting if we compare last week performance versus the difference between the prior 4 week average. Okay, then I'll get the difference. Then I compare this difference across time in the last 10 session. You could start to see that the momentum trend for the indices has started to go sideways. All right. So what it means that over here is that the momentum itself, in terms of the short-term momentum itself, starts to be a bit of we call it abated or a kind of a slow down slightly the upside momentum for the US stock indices. Then what's interesting over here is on the Hang Seng Index and the Hang Seng Tech Index. So what we could see is that the prior week was pretty much of a disaster, negative 2.2%, and worst hit was the China Big Tech Index, China Big Stocks using Hang Seng Tech Index as a proxy, down by close to negative 6%. So all in all, this was actually a scare that's actually being kind of a triggered by what you call it potential policy changes that could actually impact negatively on the Hang Seng Tech Index. But what I could see is that there's a kind of a minor positive reversal on the Hang Seng Tech, which ended last week with a positive 1.95% and almost unchanged from the Hang Seng Index. So if you look at the momentum trend over here, similar formula taking into account of their weekly performance minus of their prior 4 week average, and we look at the difference and we plot the difference across time, go back to the last 10 session, we start to see that the momentum trend starts to actually improve on the Hang Seng Index, the Hang Seng Tech Index. Right. Then pretty much sideways again for the Nikkei 225 and as well as the German we call it 40 index or the DAX itself. So kind of a sideways performance on the momentum trend, and both of them actually ended positive as well for last week, but positive 1.35% for the Nikkei 225. And we start to see slightly up 0.6. I would say that the gains are slightly reduced for the German DAX index, which is what we call it a positive 0.67% versus prior week 1.7 percent. Okay, so now very quickly, let's take a look at the performance of the 11 key S&P US sectors. We talk about definitely the US stock market from last week performance, 1st of August to 5th of August. So could see that that could actually explain the momentum trend has started to actually turn sideways as well by looking at the performance, the breadth of the 11 S&P sector. So the prior week was all 11 in the green. So last week we start to see only 6 sectors in the green. And interestingly over here is that the higher beta sectors that could actually explain the outperformance of the Nasdaq 100. You see the information technology, the consumer discretionary, and the com services actually outperform the S&P 500, up 1.95%, both up slightly above 1% on the consumer discretionary and communication services, okay, which actually outperformed the SPX by a fair bit. All right, so the underperformer will be definitely the energy stocks, which will be mentioned since start of Q3. Why? Because due to the impending softness of this WTI crude, what we could see is that WTI crude has actually broken down a key intermediate support level, which is 93.50. So I would not be surprised if this energy sector continue to underperform throughout this month also, which is August. Yeah. So now, very quickly, now let's go through the technical chart I will share with you, since we are talking about the outperformance of the Nasdaq 100. So for this week, I'll cover the Nasdaq 100 first, then followed by the SPX, right? So now let's quickly go through the daily chart of the Nasdaq 100. So on the Nasdaq 100 itself, so what we could see over here is that there's a bullish breakout above this 12,940. Okay, so let's put this level. This level should be in green. All right. Okay, so this is actually the previous swing high of 2nd of June, and bear in mind that the SPX hasn't surpassed this similar June swing high area as well. Later I show on the SPX chart. So clearly it actually surpassed this 12,940. So where's the next resistance zone will be at 13,500 slash 13,900, which is the at the 200-day moving average. So all in all, if those who actually followed me in my weekly technical outlook, so we are still looking at the rally of its June low as a corrective rally in terms of the Elliott wave and the fractal analysis approach. So to find out more about that, to give a listen to my Q3 Global Technical Outlook webinar, which I actually recorded it on my Twitter feed. So later I'll share with you where to find my Twitter feed. All right, it's actually recorded over there, so you can find more details from it where I explain the rationale about this corrective rally and why is it so. So all in all, it's still a corrective rally. That means I don't see the start of a major bottoming process where we could take up towards a brand new all-time high to surpass the November high. Okay, that is very low in probability. But nevertheless, this corrective rally is still intact. I do not see it as reaching a tipping point yet to kickstart another impulsive down move. That means, i.e., to break below the June low. All right. So right now, if you look at the RSI hasn't even hit the extreme overbought level yet on the daily perspective. So this is telling us the medium term upside momentum is still intact, and most interestingly over here is that it doesn't start to flash a bearish divergence. That means we start to see a series of higher high in price action. The daily RSI also shaping a higher high. Whereas before we start to see this kickstart of this bearish major downtrend phase, the first major downtrend phase that was after hitting its all-time high, you start to see that the all-time high in November 2021, if you correspond it with the RSI at the extreme overbought level, and also you start to see a bearish divergence. Okay, higher high in price action, but RSI showing lower high. So this where the worry comes. Indicating to us that the medium term upside momentum has started to deteriorate, where we may start to kickstart a major downtrend. But what we see now over here, it doesn't have such kind of observation yet that was actually seen in November 2021. All right. So now strategy for this week. All right. So for the strategy for this week, so you recall that last week, right, we have a neutrality stand below. We expect to go sideways below 12,960, but its price action clearly taken out above 12,960. So right now, broken above this ascending channel upper boundary, now turns into a pullback support at 12,950. All right, so I'll be using 12,720 as my key, slightly below 12,950 as my key medium term pivotal support for this week to play this push up towards 13,400 slash 13,540. Then, but however, if you have a 4-hour close below 12,720, then we will actually revive that deeper pullback scenario to end the first leg of this corrective rebound to give a test on the support at 12,180 slash 11,920, which is the lower boundary of this minor ascending channel, and as well as the former swing high congestion zone of 11th of July and 16th of July, and as well as from a Fibo, we call it a retracement perspective. We take from the low of 16th of June, projected up to last week, 5th of June. This gives us at 61.8%. All right, the golden ratio. So all in all, we actually turning bullish with a tighter a medium-term pivotal support to manage our risk-reward ratio to play this push up towards 13,400 slash 13,540 on the Nasdaq 100. Okay, so now moving on to the SPX, the SPX 500. So as you could see that the SPX 500 over here, it hasn't surpassed the June the June high area, which is at 4217. Then above it, you see 4310, which is the 200-day moving average. So all in all, right, similar as well. The RSI still hasn't shaped a very clear bearish divergence signal. Higher high in price action, so followed by higher high in the RSI, hasn't reached the extreme overbought level yet. So let me redraw the extreme overbought level for you. It's around this level here. Okay, and also bearing in mind that prior to this close to this bearish extreme overbought level, okay, on the RSI. So if you look at this, is the all-time high. All-time high is in this over here, early Jan. So you look at from early Jan all the way up to the previous line, you see over here that even prior to the early Jan area, it starts to show a bearish divergence on the SPX 500. Okay, so but however, at this point in time, it hasn't shaped this similar observation yet, so indicating to us that this upside momentum for this corrective rebound phase is still intact. All right, from the lows of 17th of or 16th of June this year. So for the strategy for this week, right, last week we actually turned kind of a neutral between 4,200 slash 4,117. So price actually, yeah, did indeed pull back slightly, but it didn't shape that deeper pullback. So what we do over here is that from a neutrality stand, we due to this momentum that is still pretty much stronger that was actually seen on the Nasdaq 100, we will actually flip to a bullish bias on the SPX 500 with a very tight medium-term pivotal support for this week, very similar to the Nasdaq 100 as well, to better manage our risk. So we give it at 40.70. So as long as 40.70 holds, we could actually see a further push up towards 4,200 slash 4,217 in the first step. So this 40.70 is also very close to the upper boundary of this ascending channel. This new ascending channel that has started to accelerate much at a steeper degree compared to the previous ascending channel from the low of 17th of June. So what I'm just talking about, this ascending channel is on the 14th of July. So if I connect the higher lows and the breakout from this previous ascending channel resistance, the price actually starts to shape this bullish breakout, indicating to us that the movement itself has starts to accelerate on the upside uh, at a steeper pace on the upside since 14th of July. And with a tighter 40-70 key medium-term pivotal support level, we could actually manage the risk much efficiently. So potentially looking for a push up towards 4,200 slash 4,002. 4217. Okay, but however, if you have a 4-hour close below 4070 level, which is pretty much key in terms of a graphical approach, the lower boundary of this ascending channel, also the pullback of this former ascending channel resistance now turns to a pullback support level, it may shape a deeper pullback, or we call it kickstart that retracement to actually end this first leg of this corrective rebound to see a deeper pullback towards 3910 level, which is the former swing high area of 8th of July. And as well, if we drew the Fibo retracement taking from the lows of 17th of June all the way up to 4th of August last week, it's close to the 50% retracement. All right. So now, moving on, next will be the Hong Kong 50. So on the Hong Kong 50 index, right, last week we were actually bearish to play down, push down, below, as price action continued to evolve, below this short-term descending trendline resistance, back down towards the lower part of this sideways range configuration that is in place since 4th of April 2022 high, and the lower boundary of the range is at 19,165. So what we could see over here is that last week, at the start of last week, early part of last week, it printed a low of 19,532. They actually hit 19,165, and thereafter it started to shape a series of higher high and higher low. And also the RSI managed to also bounce off right at this extreme oversold level at 23% on the 4-hour chart, indicating to us that, hey, potentially we could start to see another leg of rebound back towards the upper area of this sideways range configuration that is in place since 4th of April 2022. And what's interesting over here is that from the higher time frame chart on the weekly chart, it start to shape a this bullish, we call it kind of a bullish dragonfly doji configuration as well, on the weekly time frame, indicating to us that, hey, last week it actually ended on a much more positive note, indicating to us that this 1, 2, 3, 4, 5, this prior 6 week of decline, weekly decline, the downside momentum has more or less abated. So with this in mind over here, we were actually more confident to actually flip to a bullish stance for this week, using 19,165 as my key medium-term pivotal support, and for sure it got to stage a bullish breakout above 2340, which is this the we put it the swing high of the last swing high that lead to this pullback, which is on the 4th of August, last Thursday, 20,340. A breakout above this level, that means a 4-hour close above 20,340, potentially could give more credence, or we call it increase the odds to kickstart another leg of rebound within this sideways configuration phase towards the upper the upper limit of this sideways range. In first step at 21,100, followed by 21,400. But however, if you start to see a bearish breakdown, a 4-hour close below 19,165, then all bets are off for the bullish buyers. Then we see a further slide to retest this major support level at 18,240, which is the 15th of March 2022 swing low area. Now, the next indexes I will share with you all for on the Asia side will be the Nikkei 225. So if you look at the Nikkei 225, it's also trading pretty much in the sideways range as well, as depicted on my start of my this presentation where I share with you their momentum trend. So if you look at since the high of 29th of March, it's been evolving in this sideways range, holding below 28,400 level. All right, and also the RSI is also hasn't surpassed this key resistance, which is at 69% level, which is close to the overbought zone. So graphically and momentum wise, it seems to me that there's no clear signs that there will be a potential a breakout above 28,400. So if you could look at last week, we have a bearish bias below 28,400. So given that we the elements are so kind of mixed right now, especially on the shorter term. Why? Because on the shorter term, this RSI has stats to shape a bullish breakout from this descending trend line resistance previously in place since 22nd of July, connecting to the low high of 28th of June. And late last on Friday, it managed to shape a breakout and a retest at this level. Okay, and with that in mind over here is that it seems that elements, short-term elements now is kind of mixed. So we will actually turn neutral for now on the Nikkei 225, which is at 28,400 and 27,420, which is the swing low of 26th of July. So unless so more of us expecting a sideways range configuration between this neutrality zone at 28,400 and 27,420. Unless we have a clearance with a 4-hour close above 28,400, then we will validate a further push up towards the next resistance at 29,380, which is the 5th of January 2022 swing high area. But however, if we start to see a 4-hour close below 27,420, then we will see a deeper pullback to retest this minor ascending trendline support in place since the low of 20th of June, now acting as a support at 26,800, which is so confluence with the swing low area of 19th of July and the former swing high area of 11th of July. Okay, now moving on, next will be the German 40 index. Okay, the German 40 index. So if you recall that the German 40 index last week, we have a resistance to watch at 13,900. So indeed, price action actually went up to 13,900 on Friday, and it started to shape a shooting star formation on Thursday, and on Friday it's a hanging man. So pretty much showing that this movement on the upside here is getting kind of a taking a pause by this bearish reversal candlestick that's being formed right below this 13,900 level. And also but it's still holding above this 50-day moving average, which is now acting as a support at 13,360. Okay, this 50-day moving average, which is also the former swing high area of 19th of June and 20th of July. All right, so the RSI also coming very close to a key resistance level at the 63% level. So based on the price action wise and based on the momentum analysis on the daily RSI, it seems to me that we may face a bit of headwinds for the bulls to actually push much higher below 13,900. So what's in store for this week? Okay, so given that the DAX itself has a bit of a correlation with positive correlation in the last 1 to 2 weeks with the SPX 500. If you look at the price action, it's almost the same, moving upwards in a series of higher high and higher low. That means with the US major stock indices, the SPX and Nasdaq 100. So given that we are still having a bullish bias on the SPX 500 for this week as well as the Nasdaq 100. So given its direct correlation in the last 2 weeks or so, so it'd be definitely more prudent to actually turn neutral instead of maintaining that bearish bias. Looking for it to go down to 1300 where we have last week. So last week, if you recall, we have a bearish bias below 13,900 to play a deeper pullback or a pullback within this corrective phase towards 13,100 before a new uplift materializes. But given that the SPX 100, the SPX 500 and Nasdaq 100 is still evolving in a bullish configuration, so I will turn neutral between 13,900 and 13,360. What's 13,360 is actually the former swing high, the 50-day moving average, which I share on the daily chart, and so confluencing with the minor swing low of 2nd of August and 20th of July. So neutral between these two levels for this week on the DAX on the German 40, unless we start to see a 4-hour close above 13,900, that we will validate a further up move within this corrective rebound phase to actually go up to 14,500, which is the swing high area of 6th of June, and 14,500 is pretty key over here as well. All right, on the daily chart. So, but if we start to see a 4-hour close below 13,360, then we will start to see that deeper pullback towards 13,000 support level. So, all in all, right, what we could see over here is that the indices itself, the stock indices of itself, say yes, the US momentum trends kind of look a bit sideways. But if you could see the price action on the indices still has a bit of room to push up more, even though momentum has starts to kind of ease off a bit. But in terms of the timing wise, means of the elliott wave perspective over here, we can still shape a higher move on the Nasdaq 100 and the SPX 100. So we still have that bullish bias on the Nasdaq 100 and the SPX 500, but with a tighter key medium-term pivotal support to manage the risk. And we flip it to a bullish bias on the Hong Kong 50 since it's coming very close to a key medium-term range support level coupled with a weekly bullish candlestick, and we turn neutral on the Japan 225 and the German 40 for this week. Okay, so before we go over here is that let me share with you, this will be my Twitter account. So this is where I share with you all in my quarter outlook. So you go to my profile, it's my link page. So firstly, give me a follow first at Kelvin SC Wong. Just register a Twitter. Then after that, you find me, follow me, on my notification, and this will be my pinned tweet. So my pinned tweet will be at the top of my page. So this is my Q3 outlook, which I actually shared much earlier with the audience. This is where I actually emphasize why I think, or there's justification for it, that why we think, why we have a justification that the current rebound is still a corrective phase rather than a what you call it, the start of a major bottoming process. All right, so with that, have a great week ahead, and I see you all again in my next video.